Let me ask you something. What if the most important financial story of your lifetime is unfolding right now? Not on your news feed, not on CNBC, not on the front page of any newspaper, but quietly in the background, in numbers that most people don't understand and almost nobody is talking about. Because here's what I'm seeing. The US dollar, the most powerful currency in human history, the backbone of global trade, the thing your salary is denominated in, the thing you're saving for retirement, is losing its grip. Slowly, silently. And by the time it becomes obvious to everyone, it will probably be too late to do anything about it. Now, I want to be clear. I'm not here to tell you the world is ending tomorrow. What I want to do in this video is show you exactly what's happening, why it's happening, and most importantly, what you can do about it before the crowd figures it out. Welcome back to the channel. Let's get into it. Before I show you what's happening right now, I need to give you some context. Because this story didn't start last year, or even last decade, and more importantly, it has happened before. Every single dominant currency in history followed the same arc, and every single time, the people holding that currency thought they were safe, until they weren't. The Portuguese real dominated global trade in the 1400s, then Spain rose. The real faded. The Dutch guilder ran the world's most sophisticated financial system in the 1600s, the first central bank, the first stock exchange. Then they overextended, they printed, they debased. The guilder collapsed over decades, not overnight. Then came the British pound. For over 100 years, the pound sterling was the dollar of its day. Britain ruled global trade, global finance, global military power. Then it fought 2 world wars, racked up impossible debt, lost its manufacturing edge, and at Bretton Woods in 1944, the world quietly handed that crown to the United States. And the dollar has been king ever since. It's been an extraordinary run. But here's what nobody wants to say out loud. Every empire that came before us followed the same arc. Rise, dominance, overextension, debt, decline. And right now, we are somewhere in that arc. So what actually kills a reserve currency? It's never one thing. It's always a combination. And those ingredients, every single one of them, are present right now. So let me walk you through what I'm calling the 5 quiet killers of the dollar. Killer number 1, the debt nobody wants to solve. The United States currently carries close to $34 trillion in national debt. But here's what matters. It's not just the number, it's the speed. The debt is growing faster than the economy that's supposed to pay it back. Interest payments alone are now approaching $1 trillion per year. To put that in perspective, that's more than the entire U.S. defense budget. And economist Ray Dalio has one line that keeps coming back to me. When a country reaches this point, it has exactly 3 options. Cut spending, raise taxes, or print money. The United States has consistently, repeatedly, almost religiously chosen option 3. Killer number 2. The world is quietly selling U.S. treasuries. For decades, the dollar's power came from one simple fact. Everyone needed dollars to buy oil, and to hold dollars, they bought U.S. treasury bonds. China, Japan, Saudi Arabia, the entire world was essentially funding America's debt because they had no choice. But something has shifted. China's treasury holdings have dropped from a peak of $1.3 trillion in 2013 to under $800 billion today. Japan has been quietly reducing its position since 2022. Foreign-held U.S. debt as a percentage of the total has fallen from over 43% to around 30%. When your biggest creditors start heading for the exit, slowly, quietly, without making headlines, that is not a warning sign. That is the sign. Killer number 3. The petrodollar is cracking. In 1974, the United States made a deal with Saudi Arabia. The Saudis would price their oil exclusively in U.S. dollars. In exchange, America would provide military protection. That deal, the petrodollar system, is the single most important reason the dollar became and stayed the world's reserve currency. Because if you need oil, you need dollars. Every country on Earth, regardless of whether they liked America or not, had to hold dollars. But in 2023, Saudi Arabia publicly announced it was open to trading oil in currencies other than the dollar. China has been settling oil trades in yuan. India and Russia are trading in rupees and rubles. The foundation of the entire dollar system, the reason it has been untouchable for 50 years, is developing cracks. Killer number 4. The BRICS alternative is getting real. BRICS, Brazil, Russia, India, China, South Africa, now accounts for over 36% of global GDP, surpassing the G7. In 2023, they invited 6 new members, including Saudi Arabia and the UAE. These countries are not launching a new world currency tomorrow, but they are building the plumbing: alternative payment systems, bilateral currency agreements, independent settlement rails that would make a dollar alternative possible. And here's the thing. This is not about ideology. It's about options. The more options these countries have, the less leverage the dollar has over them. Killer number 5. Trust in the Fed is eroding. Perhaps the most underrated killer of any currency is the slow loss of trust in its institution. The Federal Reserve told us in 2021 that inflation was transitory. It was wrong. It told us rate hikes would tame inflation quickly. It took 2 years and significant economic pain. And now, in a political environment where the independence of the Fed itself is being openly questioned, where powerful voices in Washington are calling for the Fed to take political direction, the thing that has backed the dollar more than gold, more than oil, more than military power, which is trust, is quietly eroding. When a currency dies, it happens gradually, then suddenly. We are still in the gradual phase. Most people won't notice until the sudden part arrives. Now here is where it gets really interesting and a little uncomfortable. Because when I put all 5 of those trends together, and I look at how governments and central banks have responded to every major crisis in the last 30 years, a pattern emerges. And that pattern suggests the dollar's decline is not being prevented. It's being managed, directed, and in a very specific direction. Think about it. Every major crisis in modern history ended with more centralization. After 2008, the Fed's balance sheet grew from $900 billion to $4.5 trillion. After 2020, it grew to $9 trillion. Governments gained more surveillance over financial flows. Regulatory control over banking deepened. It never went the other way. Never less. Always more. And right now, as the dollar weakens, there is a replacement already being designed, already being tested, already being quietly legislated into existence. In 2022, President Biden signed an executive order directing all federal agencies to explore a central bank digital currency, a CBDC. The Federal Reserve has been running pilot programs. The Bank for International Settlements, the central bank of central banks, has active CBDC experiments running across 24 countries simultaneously. And the legislation? There is a bill moving through Congress right now called the Genius Act. What it says is that any company that wants to issue a digital dollar, a stablecoin, a dollar-pegged digital asset, must back it dollar for dollar with U.S. Treasury bonds. Think carefully about what that means. Tesla launches a digital wallet. You load it up. Tesla takes those dollars and is required by law to invest them into U.S. government debt. Apple Pay starts offering yield. Amazon launches a digital coin. McDonald's rewards actually earn interest. Every major corporation with an app and a customer base becomes a distribution channel for U.S. government debt. Billions of people around the world, in countries with weak currencies and corrupt governments, will happily load up an Apple Wallet or a Tesla wallet to protect their savings. And without knowing it, they become creditors to the United States government. Now, this has already been tested. A company called Tether, the issuer of the world's largest stablecoin, currently holds over $100 billion in U.S. treasuries. That makes them one of the largest holders of U.S. government debt on Earth, bigger than many countries. And Tether has already frozen wallets, sanctioned addresses, complied with government takedown orders. All it takes is a line of code and your money stops working. Scale that capability to a system where every major corporation's digital wallet is backed by U.S. treasuries, governed by U.S. law, and regulated by U.S. authorities. And you get something that makes the SWIFT banking system look limited. SWIFT can cut a whole country off. This new system would be able to target any individual anywhere on Earth, regardless of what their own government's laws say. That is the opportunity hidden inside the dollar's decline, not to save the dollar, to replace it with something more controllable. Now, I want to be honest with you. This is a theory. I am not saying there is a room somewhere with 12 people who planned all of this. I don't think that's how it works. What I am saying is that throughout history, every time a monetary system has shifted, the people closest to power used the transition to upgrade their control over the system. That is not a conspiracy. That is just history. So what actually happens from here? In my view, there are three possible paths. The first is the slow burn. The dollar doesn't collapse dramatically. It just fades, like the British pound, which still exists but has lost most of its global dominance since 1944. Your savings don't go to zero. They just quietly buy less every year. Inflation runs slightly above what your savings earn. Real purchasing power erodes across a decade. This is the most likely scenario, and it's also the most dangerous because it's invisible until the damage is already done. The second is a crisis reset. A debt shock, a geopolitical event, or a sudden loss of confidence forces the issue. The Fed prints aggressively into rising prices, inflation spikes into double digits, and a new digital monetary framework is introduced as the emergency solution. This is faster and more painful, but it's also the scenario that creates the most opportunity for those who were prepared ahead of time. The third is the managed transition. The authorities already know what's coming. They engineer a soft landing into a new monetary framework. The CBDC infrastructure is already built before the crisis hits. The stablecoin legislation passes quietly. The old dollar doesn't die. It gets absorbed into something new. And most people won't even notice it happened until they're already living inside the new system. My honest view is that what we'll get is some version of all three, happening simultaneously at different speeds in different parts of the world. But regardless of which path we take, the destination is the same. A world where the dollar is weaker, where the rules of money have changed, and where those who didn't see it coming will feel it most. So what do you actually do with all of this? I want to give you three things I am personally doing. Not financial advice, just what makes sense to me given everything I just laid out. The first thing is to own assets that exist outside the dollar system. Physical gold, silver, Bitcoin. Things that cannot be printed, cannot be inflated away, and do not require a bank or a government to hold their value. I personally hold physical gold, and I self-custody my Bitcoin. Not through an ETF, not through a broker, but directly. Because if this system does reset, I want to be holding the actual asset, not a promise from an institution to someday give me the asset. The second thing is to reduce exposure to dollar-denominated savings that earn less than inflation. Sitting in a checking account earning near zero while inflation runs at 3, 4, 5% is a guaranteed slow loss that most people never feel because it happens invisibly. There are better options, whether that's assets in other currencies, commodities, real estate, or inflation-protected instruments. The specific choice matters less than the awareness that doing nothing is itself a choice with a cost. The third thing is to stay informed and think for yourself. The single biggest advantage available to any individual in this environment is understanding what's happening before the majority of people do. That window of awareness between when something starts and when everyone can see it is where the best decisions get made, which is exactly why I make these videos. The dollar's slow death is not coming. It is already underway. The 5 trends I walked you through today are not predictions. They are present tense. The only question is whether you will be positioned for what comes next, or whether you will be part of the majority who looks back and says, "I should have paid more attention when someone was trying to tell me." If you found this valuable, please share it with one person who you think needs to hear it. Subscribe if you haven't already. I put out videos like this every week. And everything I referenced today, the BRICS data, the Genius Act, the petrodollar story, the CBDC pilots, all of it is linked in the description below, so you can go deeper on your own. As always, do your own research, make your own decisions, and I'll see you in the next one.